Well, as investors, we'd all like to get into innovative companies, particularly at the early stage, right? How can you get access and exposure to some of these companies across various industries? Let's bring in Dave Mazza, Managing Director, Head of Product at Direxion. Dave, it's great to have you on. So we're talking about different ETFs that really focus on innovation, the hot spots, what's current, things that maybe our parents didn't think about, right? So what are you watching most closely?
Yeah, exactly. That's one of the reasons why we created the Direxion Moonshot Innovators ETF, ticker Moon. It's all about seeing how the world is transforming right before our eyes, whether we realize it or not. To your point, whether it's your parents or even ourselves, the world is evolving all the time, and especially, I think, with the pandemic and even with the reopening of the economy that we're beginning to see and the macro concerns that are playing out, investors still need to focus on what's really going to change the world going forward. And so the 50 companies in the Moonshot ETFs are entirely focused on that. So they're ranging from industries like electronic vehicles, autonomous vehicles, to interesting areas in the biotech space, all the way to space travel and commercialization of things of that nature, but all done with small and mid caps. So you avoid a lot of the potential overvaluation that we're seeing just in large cap growth.
Yeah, it's interesting. The thing about when we think about innovation is there's always a lot of costs up front very early, and sometimes we don't know which ones will make money. I think that's why sometimes people always wanted to pick the dividend aristocrats that have been raising their dividend for 25 years. This is a great, good old American company. All of these, we don't know in 10 or 15 years which ones will even be around sometimes. Do you get worried when you're doing something with so much innovation? And the pandemic, of course, maybe transformed things as well.
Yeah, I think that's a great point. Some of these names might not pan out, but which is one of the reasons why doing this in an ETF might make sense. So we have 50 stocks, all focused on companies that are spending the most on research and development relative to their sales compared to their industry peers. And in their corporate financial statements, are they focused on innovation from a corporate culture standpoint? But to your point, the goal here is to identify some of those that are going to truly change the world. Not all of them might, but as opposed to trying to pick one or two of these names and then build a portfolio around 3 of them, doing it at 50, you're increasing your shots on goal to make that potentially happen.
What's amazing is the Moon ETF that you just told us is up about 80% since the inception just in November. So it's done really well, folks. I see it's come down a little bit there, but it has been a real winner. Some of the others, you have Fallen Knives, High Growth, Work from Home, World Without Waste, Connected Consumer, and Dynamic Hedge. Tell me about which one. I guess you love them all. Pick out one or two that you think should really be a focus.
Well, like you said, it's always difficult to choose your favorite child. However, let's put pen to paper and have some reality here. I think Moonshot Innovators makes a lot of sense for investors, especially coming out of this correction that we're seeing in some of the primarily from the overvalued tech space, as we're seeing macro concerns weigh in the broader market. Moonshot makes sense. I do think work from home, especially thinking about the pandemic, continues to be an opportunity as well. Here's why, is that we know that the world is changing. Look at Zoom's most recent earnings. Many people expected them to be more of a flop, but they actually raised their guidance. They beat earnings as they become more ingrained in the way businesses work going forward. So hybrid working models, especially in white collar service jobs, are not going away. That ETF focused on cloud computing, focused on cybersecurity, remote communications, document management companies, I think continues to come out of this and do well. But for investors looking for something outside the box, that's why I would advocate them looking at our Fallen Knives ETF. This ETF literally looks for companies that have underperformed, but actually have strong cash on their balance sheets, cash on hand, low debt to equity. So maybe just something from a macro standpoint impacted them in a short period of time, but they actually have some potential to do well going forward. So Fallen Knives, ticker Knife, is an opportunity for investors to do something kind of the opposite of what we're seeing primarily with all the growth focus in today's market.
Right, NIFE, folks, is the ticker symbol on that one. So do you have any names offhand that you think are in that right now that you can remember? The names that have been beaten down, you said they're underperformers, but really have good cash flow?
Yes, it's interesting today. You're actually going to see some names in that portfolio that are actually in the biotech space, some names in the financial space that were actually beaten up, and then as we're seeing this rotation broadly away from growth toward value, that are beginning to do quite well. So this is a name that's purely kind of focused on the tip of the spear of companies that may actually, from really a macro standpoint, but also based on their fundamentals, may start doing well going forward.
Yeah, it's exciting. I see where you're coming from with all of this. Good luck with it all. Dave, nice to have you on the show. Always come back and give us some updates. Dave Mazza, Managing Director, Head of Product over at Direxion. Thank you.